Okay, in this video, going to show you how to create a bank deposit. Now, we started talking about this in another video, but really thinking about the process of, in your workflow, if you think about an invoice that you send to a client, that's money that's owed to you. Then when a customer writes you a check, hands you cash, makes a payment of some kind towards you, you record that on that invoice as a payment. That shows that that invoice has been paid. But that money doesn't magically appear in your checking account. Oftentimes you have to make a deposit, you have to go to the bank, you have to make that deposit, mobile deposit or something, in order to actually get that money into your account. That is the point that we're talking about in this video, as far as creating the deposit. So in a previous video, we recorded how to do receive payments on invoices. So that's essentially that money sitting in an envelope ready to go to the bank. And now we're going to take that money from that envelope, figurative envelope, and take it to the bank. So in this example, we have 3 invoices here that we receive payments on. This invoice 1035, 1036, and 1037. So these are marked paid. And if we come up here, we see that these 3 payments are recorded. That's what closed those invoices. So they paid us 2 by check and 1 by cash. So now how do we make a deposit and get these into our bank account? Well, if you have this side tab open, then the new button will be here and it will create this menu. And then we have under our other column, the far right column is bank deposit. If you close the thing, this little plus sign will appear and it'll give us the same list. So here we're going to accept or select this bank deposit. So the first thing with making a deposit is we have to choose, okay, what account are we depositing the money into? So in this case, we do the checking account, but you'd select whichever one in your account that you're going to be depositing it to. The bank deposit, the day that you're actually taking it to the bank, not the day that they paid, but the day you're actually depositing it. So we're going to select that as today's date in this example. And then you'll notice here these payments. So these are the ones that we, in this example, that we recorded. So we're going to select, we have a check for this one, a check for that one, and they paid cash for this one. We receive payment, and it shows that that totals $1,153.85. So we want to check that. If we add up our checks and our cash, does it equal that amount? Now, it's really important that we want to get in the habit of any money that we collect from our customers, we want to make sure that that same money makes it to the bank account. That's how we create a paper trail. If you stop for coffee and use some of the cash, then that really messes things up. Not only your bookkeeper will not be happy, but also from an audit standpoint, we want a paper trail of where the money came from, exactly what it was for, and where it went. So that's why we do this way. So we've selected those 3. We've verified that, yep, that's the amount that we are going to be taking to the bank. And then we can come down here and close this. Now, I'm going to go over to the bank transactions here. And although we don't have this amount in the bank feed, I'm going to show you an example of how that deposit is going to show up here in the bank feed. So this may not be your responsibility, but this is kind of like giving you a big picture of how this works. So you'll notice this one here, we have a deposit of $868.15, and here is the deposit when it actually hit the bank account, so there's something to match to. So if we drill down on this, we open this up and go to the deposit, we'll kind of work back. So you see we have this payment here, we have this payment here, and these 3 down here. So these are the payments, and these payments are attached to an invoice. So we could click on each of these, and it's going to take us back to an invoice. So let's just follow the paper trail back. So we went from the cash in the bank account, we matched that to a deposit, which is made up of payments, and payments are tied to invoices. So if we click on this one just as an example, now we have a received payment and we see an invoice selected here that is for. A certain amount of it was paid down on this account. So this paper trail makes sure that everything is accounted for, everything is clear, because at a base level, if your customer reaches out to you and says, hey, I thought that I paid that invoice. I sent you a check last week, but maybe they had 2 open invoices. Well, having a good paper trail like this makes it very easy to tell your client, no, that was for this invoice. This check was applied to that invoice as a payment, and we deposited that on this day. So now we have a complete journey of how that money made it to your bank account. So for legal reasons, for accounting reasons, for your client's purposes, that is all very important. So that is how the process works. Like I say, your bookkeeper or accountant may be helping you with all of this. But for your purposes, I want you to just understand the process so that you can work in line with that process. So I hope that helps you. The creating a deposit itself is pretty simple, but I feel like the backstory on that is really important. So that is it for this video, but we'll see you in another one.